Hello and welcome to Startup Street. I'm Arundhati Ramanan and these are the top headlines that we're tracking for you from the startup world. Entities linked to China's Alibaba all set to exit Zomato's parent Eternal through block deals tomorrow. This comes a day after Alibaba sold its entire shareholding in Paytm. The stake sale in both companies is expected to rake in 31,000 crore rupees. Bluestone has fixed a price band of 492 to 517 rupees per share for its IPO that will be open for subscription from August 11th to August 13th. The IPO involves a fresh issue of 820 crore rupees and OFS worth 720 crore rupees at the upper end of the price band. Zype, a credit-led financial platform for salaried individuals, has raised 90 crore rupees of equity capital in a Series B fundraise led by Japan-based VC Unleash Capital Partners and existing investor Exponentia Capital. The firm plans to utilize the funds to broaden its product suite and double down across Tier 2 and 3 markets. Debt collection platform DPZ0 has raised $7 million in Series A funding round led by Japanese venture capital firm GMO Venture Partners, SMBC Asia Rising Fund and Bloom Ventures. The fresh capital will be used for development of DPD0's multilingual AI collection agent and enable launch of a network of professional field collection agents. OpenAI is in early-stage discussions about a stock sale that would allow employees to cash out and could value the company at about $500 billion, a staggering bump up from its current valuation of $300 billion. Reuters reported the transaction, which would come before a potential IPO, would allow current and former employees to sell several $billion worth of shares. Uber unveils a $20 billion stock buyback program and forecasts its third-quarter bookings above Wall Street estimates. The company said members for its $9.99 Uber One program jumped 60% in June to more than 36 million from a year earlier, and more than one-third of its bookings were coming from them. Those were the headlines that we're tracking for you this evening, but on what's brewing today, as AI reshapes the way software is built, one startup wants to make your code smarter, not just faster. Bangalore-based CodeKarma has raised $2.5 million in a pre-seed round led by Process, Accel and Exceed Ventures to build AI-native, self-improving software systems. Now, the company's platform helps developers spot bugs, eliminate dead code, and optimize performance, all in real time directly within their workflow. With backing from global investors like Process, who see developer tools as critical infrastructure for the AI era, CodeKarma is setting its sights on the US enterprise market. So is this the future of autonomous software, and can India lead the charge? Joining me now to discuss this further, Anant Vanchi, the CEO and founder of CodeKarma, and Dhruv Gupta, the investor at Process. Gentlemen, thank you so much for taking time out and being here with us on Startup Street. You know, Anant, let me start with you. You're aiming to build this platform for autonomous, self-improving software. What does that actually look like in practice for developers and engineering teams today? If you could sort of take us through what you have on offer.
Yeah, first of all, thanks a lot for having me here in Startup Street. It's very exciting to be on CNBC. CodeKarma, when we're trying, software is getting more complex by the day, and as we build more and more software using AI, it gets even more complex. Now, developers are going to find it a lot more difficult to manage this extremely large software, and then we need to actually have AI to come and help these developers to build these software better. Now, there is a lot of software that is AI is helping to build a lot of software from a static model, but when the software is actually deployed in production, there are very, very specific insights that are needed to improve the software as and when the software is getting built. And that is where CodeKarma comes in, where it builds a loop between getting the insights as to how things are getting built and feeding it back into the development lifecycle so that the software can be better over time, right? So that's kind of the idea.
Sure. And, what does this $2.5 million pre-seed round enable you to do immediately? And how are you prioritizing capital, between product innovation, hiring, expansion, all of these things that you have to do now?
Yeah, so software building is a very large spectrum. There are so many languages in which software is built. We have Java, Golang, Python, name it. And there is also a lot of libraries that needs to be supported. And they're also built and deployed in very different ways in very big enterprise companies. So having a self-fulfilling loop as a POC, as a small product for a single language, it's a lot more simpler. Whereas when you start doing it for a large spectrum, which actually adds value, takes a lot of product innovation. So a lot of this funding would be used for product innovation. And we cannot cannot do product innovation in silos. We should also be able to work with the customers and get their input so that we build the right product. So we are trying to expand into different geographies so that we are able to acquire more customers with more use cases, and then start expanding the product use cases, product capabilities also.
Sure. So you're going to slowly and steadily build out the product and its use cases as well. But Dhruv, let me sort of bring you into this conversation. What convinced Prosus to back CodeKarma at such an early stage, right? And how did this sort of fit into your broader thesis around AI native developer tools?
Yeah, no, absolutely. And thanks, CNBC team, for having us. I think, as Anant mentioned, code written by AI systems is being deployed at an unprecedented scale, which the second order effect to which is that managing such code also becomes critically important. And CodeKarma is able to address this problem head on because they're able to provide this feedback loop, which Anand spoke about, directly into the developer's workflow. And we were able to back the team because Anant and team have a lot of experience at senior leadership roles in some of the largest Indian companies, and they have faced this problem personally and know how these systems behave. Hence, it was easy for us to lean into the problem and what CodeKarma was able to offer. As to Prosus's thesis, I think this fits right into what we are generally excited about. We have been very active and have been investing across the spectrum, whether it is enterprise software like CodeKarma or even consumer applications. In that sense, we believe that AI will lead to not just new features by existing companies, but entirely new categories. And hence, it was easy for us to foresee where the technology was going and how CodeKarma is able to solve for these second order, third order effects.
Sure. And, in fact, Dhruv, as this AI accelerates code generation, how do you see the role of these kinds of intelligence platforms, like CodeKarma, evolving within the Prosus tech ecosystem?
Yeah, exactly. And thanks for that question, because it's very important to how we operate as a firm. It's because we already have a large ecosystem of companies across LATAM, India, and Europe. It's very important that early stage frontier innovative companies like CodeKarma have exposure to them and are able to co-create some of these solutions. We'll also help CodeKarma in supporting them with the right ingredients, whether it is connecting them with our in-house AI team based out of Europe, or eventually make those connections with some of the decision makers. In that sense, CodeKarma could become very foundational to how code is being generated at some of these enterprise companies.
Sure. And, Anant, your company is very new. What's your go-to-market plan as you expand globally? And, you're particularly eyeing, the US market, right? Are there specific enterprise verticals you're targeting first? What's the plan as you go to market?
Yeah, so not like particularly targeting US. We're also working. We have a good footprint in India, and we're also working with a lot of Indian companies. We are actually looking at large enterprise companies because this problem is more pronounced in large enterprise companies more than small scale companies, and large enterprise companies which have a lot of business logic in them. So anybody in the B2C space doing edutech, fintech, e-commerce, you name it, all the players in that space would have a lot of business logic, and they would also have a lot of complex systems working together to enable this functionality that they are trying to build. So all these companies are potential targets for us, and all these companies are also embracing AI at a very rapid pace because they also want to do product innovation at a rapid pace, which actually increases the reason for them to adopt CodeKarma, right? So so that's kind of the target company and target market space.
And how many clients have you already sort of onboarded at this point in time?
We are still very early. I don't want to share any major numbers, but we have a lot of big players in India already.
So a lot of big players in India already. All right, Dhruv, before I let both of you go, what's the overarching vision behind Prosus's diverse global portfolio? I mean, you'll have companies from Swiggy, PayU, Stack Overflow, and a lot of them across emerging AI native tools as well. And how do these investments sync with your growth strategy in markets like India and LATAM specifically?
Yeah, no, absolutely. I think we recently put out a report which talks about agentic AI. And it means that increasingly we will see a digital workforce which is able to interact and deploy with these other systems. Hence, we need a lot of governance, observability for these agents, which CodeKarma is able to provide. As for our portfolio, I think what we are able to also help such companies is that bring those insights and access to those markets where we already have a footprint. For example, in food delivery or payments or classifieds, all of these niches face different problems, and we believe that each of these niches can offer a lot of problems and opportunities for young companies to emerge, and we are in a position to back them in that way.
All right, Dhruv and Anand, thank you so much for taking time out and being here with us on Startup Street.
Thanks a lot.
Thank you.
And moving on, EduFund is doubling down on India's education dreams, especially beyond the metros. The Ahmedabad-based fintech has raised $6 million in a Series A funding round, backed once again by Circano Management and Mass Mutual Ventures. EduFund offers a full-stack education planning platform, from goal-based investing and loans to visa support and expert advice, all on one app. With over 2.5 lakh families already on board, the new capital will help EduFund scale its AI-powered planning engine and take its offerings deeper into Tier 2 and 3 cities, where tuition and forex-linked costs are climbing fast. At a time when parents spend nearly 30% of their income on education, EduFund aims to become their go-to financial partner from preschool to postgrad. Joining me now to discuss this further is Ila Dubey, the co-founder and CEO of EduFund. Ila, thank you so much for taking time out and being here with us on Startup Street. You know, as I just mentioned, you're a full-stack education planning and financing platform, right? If you could sort of take us through what you have on offer and the gap that you're trying to address here.
Thank you, Arundhati, first of all, for having me. I think you gave a great explanation of what we do, so I don't know what more I can say. So in terms of what we offer, right, I think you mentioned a very key point that today education costs are rising. The ecosystem of education planning is highly, highly fragmented. So when parents start to think of their journey or this journey, they may go to their bank or they may go to their financial advisor, which is one part of the journey. But as the child gets older and they have other decisions to make, which is, where is my child going to go to school, or how do I get an education loan, there would be other players that they go to. The entire planning journey is not combined into one ecosystem. And that's exactly what we bring to the table. From the time the child is born, we go to families and we say everything is integrated and unified into one system, so that when you think of saving and investing, we can guide you. But as the child grows and you think of other very important decisions throughout that journey, be it what is the best fit university or college for my child? Is India a good option, or is education abroad a good option, or do I need a loan? We unify that into our platform, and all those services are there.
Right. And, you know, EduFund has just raised $6 million in a Series A round, right? So what does this milestone essentially mean for your mission of making education financing accessible across India? How do you sort of plan to deploy the capital?
So we definitely want to expand beyond the metro cities into Tier 2, Tier 3 India, where I think there are many families that want to plan for their children's education. They have the means to do so, but they simply don't know how to start. They have been either misguided, or, like I said before, the ecosystem is so fragmented, they don't know who to turn to. So for us, this really allows us to expand our footprint into the areas we feel families need it the most. Secondly, because we are a technology company, a lot of our acquisition strategy, the way that we work with families, is largely technology based. The apps and products that we have are, like I said, led by, our in-house tech team. And for us, this capital allows us to expand some of that and also create some new technology that will service a lot of the channel partners and the service providers that we work with. We have about 400 partners in our ecosystem today, from independent financial advisors, education counselors that know what we do and service our mission even further. So this capital will be largely used towards that.
All right, so big plans there with the capital going forward. You know, you were pointing out how you want to go deeper into Tier 2 and Tier 3 cities. You sort of built a strong community of over 2.5 lakh families, right? So what's driving this trust in a sector traditionally dominated by banks and NBFCs?
Great question. So I think when it comes to finance or financial planning in general, trust is absolutely essential. And for a young brand like us, it's imperative that parents know us, they believe in what we do, right? And so, like I mentioned earlier, the channel partners that we work with, the advisors on the ground that we work with, are a big, big part of that, to help parents, to educate them on the rising costs, why it is so important to save and invest early. And as part of this funding, we will be using that and deploying it towards creating more partners along the way, because these partners will be championing our mission on the importance of planning early.
Right. And with this funding, you also plan to scale AI-powered advisory, right? Can you sort of walk us through how this tech will sort of personalize planning for each family?
Yes, absolutely. So today, a lot of financial planning and decision making when it comes to finance is largely driven by humans or a financial advisor that you would have on the ground that you go to. EduFund has a pretty large and strong research team that works with these families and advises them today. Where AI adds a lot of value is objectivity, obviously, and not making decisions based off of emotions. It also allows us to analyze data, financial data, much, much quicker. And so our aspiration is to create tools, financial planning tools that will assist these families to make better decisions on where to invest, how often they should rebalance over the long term, because this is a long-term game, especially when it comes to saving and investing for your child. And we try to discourage them from making any decisions based off of emotions, especially when markets are volatile. And I think AI will add just a lot of value to some of this decision making that they do.
Absolutely. And you launched in 2020. If you could sort of kind of take us through the kind of revenues you're currently making, where do you sort of hope to end this year? What are the goals that you've set for this year?
So we've seen great growth. We've grown about 7x just in the last year as a company. We have a community of 250,000 parents. And so without getting into the specifics, I hope to see, that growth trajectory march forward, especially in this year, especially considering we're going to be doubling down on some of the channel partners that we work with in these non-major metros and expand some of these services that we are providing to the families that we work with.
All right. Ela, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Thank you very much.
On that note, it is time for us to head into a short break. Coming up on the other side, Jeh Aerospace has raised $11 million in a Series A funding round led by Elevation Capital, a special conversation with its co-founder on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. Let's go across to the big story that we're tracking for you today. Entities linked to Chinese tech giant Alibaba are planning to sell their stake in Zomato's parent, Eternal. This comes a day after Alibaba-linked entities exited another Indian startup, Paytm. With this, both Paytm and Zomato will not have any Chinese investors. Yusuf K is here with all of those details. Yusuf?
Chinese tech giant Alibaba is selling off its investment in two top Indian startups, Paytm and Zomato, potentially making a cool 31,000 crore rupees in the process. Anfin, which is a subsidiary of Alibaba Group, will make a complete exit from Zomato's parent company Eternal, just a day after exiting Paytm's parent. Anfin held about 25% stake in Paytm post-IPO and made a gradual exit over a 4-year period. It mopped up 18,000 crore rupees by selling its stake in Paytm. Both Paytm and Eternal made their debut almost at the same time in 2021. At the time of listing, Anfin held 7% stake in Zomato, and about 5% of its holding was sold by Anfin between March and August 2024, raking 7,600 crore rupees. The interesting part about the deal is Zomato, the average selling price. While Anfin sold nearly 18 crore shares at an average price of 160 per share, in another sale was happened in August 2024 at an average price of 257 rupees. Now, the floor price for tomorrow's block is set at 285 per share, which is 4.6% discount to today's close price. The final sale is likely to garner 5,370 crore rupees, taking the total encashment of 13,000 crore rupees. So 13,000 crore rupees likely from Zomato and 18,000 crore rupees already pocketed from Paytm. Alibaba stands to make nearly 31,000 crore rupees by exiting both Paytm and Zomato.
All right, Yusuf, many thanks for those details. Now, Jeh Aerospace has raised $11 million in a Series A funding round led by Elevation Capital. The company is backed by big names like Indigo Ventures and former India heads of Airbus and Boeing. Their facility in Hyderabad builds high-precision aerospace and defense components, supplying parts to Tier 2 manufacturing companies like Spirit Aerosystems. My colleague Madhya Mujawar spoke to the co-founder, Vishal Sangvi, on how they plan to use this capital and where do they see themselves in the next few years.
Investors have been very happy with the growth and the speed of growth that we have achieved in a very short time. Since the raise of our funding from General Catalyst in January 24, we have scaled up truly fast. Today, we are a strong team of 100 people. We have delivered high quality, flight critical, more than 100,000 parts already to our existing customers in the US.
All right. So now this fresh fundraise, how do you plan to deploy the capital? Will it go into capacity expansion, product development, or certifications? If you could give us some idea on that.
Sure. So two broad areas that we are going to invest this into. One is, into significantly upgrading our capability and capacities as far as the manufacturing technology is concerned. So we would be expanding that significantly. Second thing is, to further deploy capital in enhancing our digital stack. We believe that the digital manufacturing would be the way to be as we grow this organization. And last but not the least, we'll continue to invest in building a very, very strong team across all the functions.
All right. How much did you have to dilute from your stake for this Series A round, if you could tell us?
So, it's the same way, I think, asking the question of the valuation. So, I will let that pass as you can appreciate it. But again, I think we're truly trying to build a long-lasting, sustainable, world-class aerospace organization from our side.
Then take us through your financials. What was your revenue in FY24, FY25, and what are your growth projections for FY26? Have you hit break-even?
So very happy to share with you, Madhya. Again, if you check our background, we have successfully run large aerospace business in our past corporate avatars. So we understand how this business is done. The way this industry is, a lot of people say that you need to burn money, but that's not how we see at things. Last year, we had a healthy profit. We will continue to have healthy profits this year as well, because we believe it's important not to just continue to burn money, but rather, while creating value for your customers, also ensure that we do it in a healthy way from our own organization standpoint.
So last year, you mean FY25. So what was the profit that you made in FY25?
So again, we're not sharing the profit and the revenue numbers at this time, as you can imagine. But again, a significant revenue from a first year of operations. We will, be 3xing our revenue this year from our last year. So again, we'll continue to grow on those fronts. And you can sense that if we have a 100 people team and it will have to be backed by good revenues and good profit to handle that.
All right. So what aerospace components do you manufacture? If you could tell our viewers, which aircraft types have your parts?
So we at this moment manufacture flight critical components for aero engines. So these are the engines of the aircraft. So they are some of the most complex components because of the type of materials that are used. Very hard metals have to be machined like titanium and Inconel. Also very, very tight tolerances are needed in each of this. So, in micron level tolerances that are needed. That's what makes this business very complex. So a lot of our parts end up into a lot of the GE engines eventually. It might be GE Leap, so on and so forth. So yeah, and some of the parts also go into the structure side and on the tooling side.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.